Hello, hello, good morning. Hey, welcome to Real Estate with Soul, the podcast where we explore the heart and soul of the real estate industry. I'm your host, Khaled Nathan Alim, the real estate boy, and together we'll be diving into the stories and experiences of professionals who are dedicated to serving the underserved communities in the real estate industry. So, whether you're a real estate professional, a home buyer, or simply interested in a real estate industry, this show or podcast is for you. So join us as we dive into the world of real estate with soul. Now, today I have a very special guest. I have the branch manager of Amres Corporation, Ann Evans King. Welcome to the podcast, Ann.
Thank you, Kelly.
So I wanted to bring Ann on. I've been watching her and following her for a while, and she just kind of gets stuff done. Um, Wanted to bring her on so she can share with you, you guys out there, her experiences, and so she can break down exactly how she can help you guys. So, Ann, why don't you tell us how did you get involved, or how did you start your career in mortgage lending?
Whew. Well, I started in the mortgage business in 1998, so 26 years ago.
Oh, wow.
I started off with an investor, and I noticed that there was a need for our mortgage clients because we were just sending them out to a different company. So I said, "Look, let me try this. Let me see what this is all about." And this was back when it was a lot easier to get loans done. So yeah, so that's how I started, and I'm still here 26 years later. So
Right. So you've been through the financial crisis
oh yes.
back during the countrywide days, and if you
No.
had a pulse, they were giving you loans out there. So you went through all of
Oh yes, yes, yes. You just needed a pulse. You didn't even need a credit score.
that, right? Now, at that time, I guess at that time, were you giving out those loans also, or were you did you kind of see it coming as far as the um the financial crisis per se?
I don't think anybody really saw it. Well, except the Goldman Sachs people. But those of us who were down in the trenches, we were just in this business, and I'm sure you know it. It's a roller coaster. You just got to ride it. So when it's up and it's doing good, you just have to ride it and know that it's eventually going to fall.
Okay.
So that's basically we were one day we were submitting loans, and the next day the company went out of business. So we get a phone call that they're out of business, or an email they're out of business. So at that time it was every day we were just waiting to see who was going to go out of business that day. So it was scary. Scary times.
Gotcha, gotcha. So, tell me about your business right now. Who do you serve? What type of things are you seeing out there? Or
Right now, I'm working with a lot of first-time home buyers. I've always marketed my business to first-time home buyers, people who don't have perfect credit, who are the ones who are always told you don't need to buy a house, you should wait, and we also work with a lot of investors. We do a lot of investor financing. So, I mean, we do everything, but that's basically who my niche market is: investors and first-time home buyers,
okay,
and
and
people
what
with
area?
imperfect credit.
Okay, imperfect credit. And what areas do you cover?
Ooh, we're in 46 states,
Oh,
but
wow.
I'm in the Philadelphia area. Yes.
Okay, so you mainly handle the Philadelphia area and the surrounding counties.
Yes. Yes. But I do business. I'm from Indiana. So
Okay,
I do a lot of business in Indiana as well. So, but my main market is Philadelphia and New Jersey.
okay, gotcha. So, I guess how's the market for you? What have you been seeing lately? Since this 2024 has been thrust upon us.
Actually, January was wonderful. January and February, the market picked up. December was slow. It was depressing, but January and February picked up. Applications picked up. Get a lot of people applying, and people out there looking for houses. The good thing about now is that we can get them in and out. I mean, we're getting clear to closes in a week.
Oh,
So,
wow.
yeah.
Okay. Clear the closes in a week. And is that because before it was slow? Okay, I was getting a little bit of feedback. Is that because of prior with all of the with the volume that you guys had a lot of processors, and then now the since it slowed down a little bit, the activity has slowed down. those people are just kind of scourging through everything. What's the reason as far as the timeline being so short right
Well, when it was really busy, then appraisers were busy. We
now?
were getting appraisals back for 2 weeks. Title companies were busy. Title searches weren't coming back for a week or 2 weeks. But now that the volume has slowed down, then they have more time. They can get stuff done right away. We can get appraisals back in a couple days. We get the title back in 3, 4 days. So so
Okay.
that's why everything's picked up. And the underwriters aren't as busy. So we can get an underwriting approval the same day.
Okay, gotcha. That definitely makes sense. So I guess how are you guys? Because on this show, um, we really specialize, me, in down payment assistance. I guess
Mhm.
what type of programs do you guys have that's helping people move into homes for less?
Absolutely. We have I call it the 100% FHA.
Wow.
It's two loans.
Okay.
So we'll give you the first regular 96.5%, and then we also have a 3.5% loan. It's either repayable or forgivable. So it just depends on your credit. It We require a 600 credit score. There's no income max requirements or anything like that. You can buy wherever you want to.
Okay.
So that's one. And then we also have the 1% down conventional loan.
Okay.
We accept all of the grants that are out there. We have the PHFA grant. We have the New Jersey Housing and Finance Mortgage, whatever it is. We have that one. So we have all the grants.
Okay. Well, I want to talk about that first one, because that sounds super interesting. So the first one, you only have to have a 600 credit score. Um,
Hmm.
it's either forgivable or repayable depending on your credit score.
No, just depending on if your
Oh,
credit
wow.
score is higher, then it can be forgivable. If your score is lower, and that it may have to be repayable. So we have to look at the rate. If your score is lower, then your rate's obviously going to be a little bit higher.
Hmm.
So we just have to make sure that it's not a high cost loan. So if your score is higher and you're buying a maybe like $200,000, then it can possibly be forgivable. But
Okay.
if it's a lower priced home, then you probably have to pay it back so that we can meet high cost guidelines.
Okay. And there's no income restriction on this loan, this grant or this down payment assistance, and there's no area restriction either.
Right, you can buy wherever, and there's no income restrictions.
Okay. What about assets? Do you have to have you can't have over a certain amount of assets?
You can have as much assets as you want to. However, if you have assets, it makes more sense for you to use your own assets because you're going to have a higher interest rate.
Okay.
So all around, it's going to serve you better to use your own assets if you have them.
Okay. So it's possible, and you only have to have a 600 credit score.
Right. And just so I clarify, for down payment assistance, it's always going to be more expensive for your buyers as far as interest rates.
Right.
So if they have the money, it's going to serve them much better to use it rather than get down payment assistance. If it's a grant, like the Philly grant,
Hmm.
I'd say go for that all day long
Okay.
because that's not repayable. As
Right.
long as you live in the house, I think for like 10 years or something.
Right. Right. Now, for the the down payment assistance program that you're speaking about, is it just for single family homes or is duplexes also?
Up to 2 unit.
Up to 2 units?
Mm-hmm.
2 units. Okay. I'm writing all this down so I can tell my folks after this.
Absolutely.
Is there any other restriction with that? And this is for 3.5. This is for what? 2.5%?
No, you either get 3.5% or 5%.
3.5%.
And the 5% can be used either towards the down payment or we can use the additional 1.5 towards closing cost. You can get a 6% seller assist.
Okay. And that's for FHA. Okay. Because I know somebody else had a program like this, but all right. So if it's 3.5%, so you can either get 3.5% or 5%, and for that 5%, if it does go over your down payment, you can use some of that towards your closing costs.
Right. So you can use if you get the 5%, then we would use 3.5 to the down payment, or
Mhm.
1.5 and 1.5 to its closing cost.
What I have towards closing costs. Okay, that sounds
Hmm.
awesome. And
And then you can also get the 6% seller assist to assist with the balance of your closing cost.
now with that particular program, are you able to get money back at the table? For example, just say it goes over how much you actually need.
You can only get back what you've put into it. So you can get your earnest money back and your appraisal.
Okay, earnest money.
But usually you don't.
Right. Because I know some down payment assistance programs have stipulation that you can't get any money back, um,
Hmm.
but some do. Okay, that sounds great. Now, is that a proprietary grant, or is this something that's like from PHFA?
No, it's not PHFA. We also have PHFA.
Okay,
So yeah, so this is just a program that we offer. We have other grants as well, not grants, I'm sorry, down payment assistance programs, but that one is just the biggest one that we offer.
okay.
And
Now,
in all honestly, they're all pretty much the same. So
right. Now, when you
yeah.
say no area, do you mean the United States, or do you mean this local area
What do you mean?
where this grant doesn't have any area restriction? I'm saying, is that for like if I move to Jersey, can I still use this, or
Oh
move to
yeah.
Delaware, can I use this?
Yeah, it's in all of the United States. Yeah.
Okay, all right. Now,
Hmm.
as far as MRES, is that a broker, or are you guys one mortgage company?
No, we're direct lenders. We use our own money.
All right, I'm just
We
writing this down.
Right. We do have the ability to broker, and there are some programs that we will broker, but
Okay,
we're mainly direct lenders.
so it's more like a hybrid model where you're, like you said, you have your guys' own model, but if it makes sense, you have the capabilities of going out there. Like if there's a better deal out there, you have the capabilities of brokering and getting. Um,
Right. You mean
is
as far as the down payment assistance?
no, just as far as the loan
Right. Yeah.
in
In
general.
general, yes, yes.
Okay, I've never heard of that before. Because it's either kind of either one or the other. It's say, hey, I'm a broker or I'm a direct lender. But you guys, you
Right.
said that you guys are both.
Well, the only thing that we would broker is like a special program. So, something funky that, only one specific company will
Hmm.
allow.
Okay.
So, like, we also have no income verified financing for owner occupants. And that's just something that's offered by one company. So that's one of the programs that we would broker out because the Dodd-Frank requires everybody, as you know, to verify income if you're going to live in a property.
Right.
But this specific company, they have that program where they will allow you to not verify your income. You just state what your income is. We're going back to 2007, 2006 with that one.
Well, hold on. Let's talk about that. Okay. So, take me through that program. Take me step by step through that program. So, if I'm buying a home,
Hmm.
and I mean, it's like a no doc loan. I'm buying a home, but I don't want to show my documents, or I don't want to have to go through uh, showing taxes. I know I hate tax season, and I hate getting my records together, and so on and so forth. So it's stated income.
It's just stated income. You just state what your income is. The only thing with that program, you must have money.
Okay.
So we're looking for you to have a down payment as well as reserves. So it's not for someone who doesn't have very much money, and you can't use grants or down payment assistance or anything like that. You
Okay.
got to have some kind of stake in it. So they don't want you to walk away from it.
Right. Okay. So somebody comes in, maybe because I'm self-employed, I'm writing everything off. So I'm trying to
Mhm.
write everything off on my taxes. So it doesn't look like I make a lot of money on
Mhm.
paper. Um,
Mhm.
but I do have a certain amount of money in the bank that I can show through bank statements, which would cover the down payment and the reserve. So this
Mhm.
will be something that would be ideal for somebody like that, right?
Yes, and actually for somebody with that situation, I would also recommend the bank statement loan, which is another program we offer. We would look at your bank statements for the last 12 or 24 months. We're going to look at the deposits into your account. So, for instance, say a real estate agent, you get your closings, you put in your money into your account. We're going to take all of your deposits over the last 12 months. We're going to average them out and we're going to use a percentage of that as your monthly income. We don't want to see tax returns or anything like that.
No tax returns. And that's for owner occupied, right?
It could be owner occupied or investor.
Okay. Owner occupied or investor. Okay. Now, for all of these programs, this is what I always say is that when you ask the bank or the mortgage lender to do something extra, that usually adds a little bit of sauce onto the interest rate. Do you find that to
Hmm.
be true?
Absolutely. The higher the risk, the higher the rate.
The higher
So,
the risk, the higher the rate. That sounds like a better analogy, uh, or a better saying. The higher the
hmm
risk, the higher the rate.
it's all about the risk factor. So, keep your risk low, higher credit score, you got some money into it, then you're going to get a better rate. But if you're coming into it with a low credit score, very little money or no money down, then you're going to have a higher rate.
And that makes
But
sense. Oh, God, I'm sorry.
I'm sorry, I was just going to say, but you go into it with a higher rate, you keep that rate for 9 to 12 months, and then you can refinance and refinance into a much better rate. So don't ever let a rate scare you from buying a home.
Y'all hear that? Do not let these rates scare you. Don't be scared.
Because
Okay.
you can always refinance. You do not have to keep a rate for 30 years. You just 9 months to 12 months and you can refinance.
Right. Sounds good. Sounds good. Okay. And I think this is very appropriate. And the reason is you in this entrepreneurial culture,
Hmm.
you have a lot of people who they make money, but they're writing everything off. So when they go to the bank or the mortgage company, it looks like they don't make anything and they can't get approved for very much because of that.
Right.
Um, so now we've come up with programs to kind of counteract that. Now all of these are for like you said, owner occupies. But let's talk about first time home buyers, second time home buyers. So we all know that there are a plethora of programs for first time home buyers, whether
Hmm.
that's local, whether that's state, it doesn't matter. But how about somebody that already owns a home, but now
Hmm.
they're upsizing or they're downsizing? Do you have any down payment assistance programs for these individuals?
Absolutely. The program that I mentioned, you don't have to be a first time home buyer.
And that's the first one. The first
Correct.
one,
100%.
the hundred
Right.
percent. Okay, so for the 100%, you don't have to be a first time home buyer.
No.
Oh wow. Okay. Not a first time home buyer. First time home buyer. Okay, that's awesome because you do have a lot of people. I mean, of course, a lot of people are rate locked now because during I mean 2 or 3 years ago when interest rates were at 2% or 3%, we had the refinance boom. So there's a lot of people out there who
Hmm.
are stuck in those rates. But you also have a lot of individuals who are looking to move, but they don't have. They're not a first time home buyer. I spoke with a lady yesterday. Um, she was looking for a program, um, but she owns a couple of homes, so this would be something that's perfect for her. So, all right, well, we have the buyers covered. Somebody who wants to buy a home. Now let's talk about investors.
Okay.
What have you been seeing out there as far as people buying investment properties? Do you feel like it's slowed down, or is it still keeping pace with the past?
It's not as busy as it was a couple years ago or even last year, but we're still doing good. We do a lot of refinancing for investors.
Mm-hmm.
Do you want me to tell you what we can do for investors?
Yeah, let me know what type of special programs do you have for investors?
Absolutely. So for investors who can verify their income with pay stubs and W-2s, we can go up to 100% purchase and rehab
Hmm.
for a property that they intend to flip or refinance to hold. Those who can't verify their income, we have no income verified financing. We don't even ask you if you have a job. We just want to confirm that the rental income will cover the mortgage payment.
And that's
We
the DSC, the DSC,
DSCR, yes.
SDR. Okay.
We also have the fix and flip program. We have ground up construction. We work with the mixed use properties for investors. There's lots of programs out there for investors right now. I think the problem that a lot of investors are having is just finding the deals.
Finding the
So,
deals, and that's what they say. When the money is plentiful, the deals are scarce. When the
right.
deals are plentiful, the money is scarce.
Hmm. Murphy's
So,
Law, right?
so it's really not about the money. If a person's looking to invest in real estate, it's not about the money. It's about actually sourcing those deals.
Right, finding the properties. Yeah. I mean, we can go down to a 575 with no income verified financing for an investor.
What 575? They giving away money.
So, look, I tell everybody, if you're wanting to get into investing, if you're trying to create some kind of generational wealth or
Mhm,
create something to leave behind for your children,
mhm.
don't let credit stop you. Don't let your job stop you. We don't even ask you if you have a job.
Oh wow. Oh wow. So we're just looking, and I guess, are you finding a lot of seasoned investors still in the market, or is the majority of your business maybe new first time investors?
No, I do more seasoned investors.
Okay.
That's what I've been working a lot with lately. I mean, we can do both, but
Mhm.
I get a lot of repeat business.
Okay.
So my guys will just call, okay, and we got another property to refinance, or I want to buy this property or whatever. So we deal with a lot of both. So,
Okay. Now, if somebody is a first time home buyer, I mean, I'm an investor also, so I know
hmm
one of the biggest challenges is number one, the contractors, and also estimating the repairs.
hmm
Um, I guess, has the lending industry found any way to kind of help investors with these critical parts of the investing cycle?
No, we're hoping that you, as the investor, you've you found your own contractors.
Okay.
Now, what we will do, we will ask you for a scope of work.
Okay.
We are going to review it and we're going to analyze it based on our records. And if we think that you're underestimating the repairs, then we'll tell you we need to increase it to a certain amount.
Okay.
Because the way we're looking at it is if you default and you can't finish the project, then we
Mhm.
have to come in and finish it. And we want to make sure that we have enough money set aside for that. So.
Okay. Now, all of these products that you guys do have for investors, do you think, I guess, maybe some of the big institutions are looking to close in on that on the hard money market, because this isn't hard money, correct?
I mean, it's not private investing, but it's
Okay.
it's it's not 6 or 7% rates. You're looking at 9 to 12%. The rate again is going to be based on risk. So if you're a brand new investor,
Mhm.
you're probably looking at more like 12 or 13%, which is basically hard money rates. But if you're a seasoned investor, then you're more in the 9 to 10% range.
Okay, gotcha. And I know this question, but I'm just going to ask because I do, of course, I'm a realtor, so I have a lot of realtor friends. If a realtor is trying to get into investing, does their realtor background help them as far as to qualify for a better rate, or because they haven't done particular an investment property per se, they're going to start at the beginning as a new investor?
Yeah. And the only thing that would help for investor experience, we
Hmm.
only look at what you've done in the last 24 to 36 months.
Gotcha, gotcha.
So
Okay,
if you purchased 25 houses 6 years ago, we still consider you an inexperienced investor. And the reason for that is in the last 24 to 36 months, as you know, everything's changed.
right,
You
right.
can't find contractors, you can't find material, so that we want to see that you know the market now and not the market 6 years ago.
Right.
So
That definitely makes sense. That definitely makes sense. Now, something that a lot of people were banking on prior or after COVID was foreclosures. With you being so heavily into the investor market, have you seen a lot of foreclosures?
I see the sheriff sales are back in Philadelphia, but not as much as they were before,
Mhm.
and the prices are still kind of high.
Right.
So, there's just not a lot of deals out there anymore.
Right.
So,
And
unless you have a wholesaler who's out there beating the streets and, getting dealing directly with homeowners.
the seller, right? Because I mean, I guess people are a lot of the general public, and I think real estate is in vogue, where maybe um, 20, 30 years ago, it may have not have been in vogue, but now it's in vogue. And because of social media,
Mhm.
people have more access. So people have more access to information. So right now, if you do get a deal, it's usually because somebody's in some type of situation, some
Mhm. Mhm.
some type of hardship situation where they have to get out because of time or a family issue or I don't like this person. So more feelings versus
Right.
logic with okay, I'm trying to sell this home for the most money possible. So
Right.
um so yeah, so I want to kind of jump into the market as far as what we're seeing in the market and look at some of these statistics and we can kind of talk about it. I mean, in Philadelphia, um, from last January, January of 2023 to January of 2024, the median sold price in Philly is actually up. And this is the
Mhm.
Philadelphia metro area. So this includes a little some of South Jersey and Delaware. But the median sold price is $340,000. That's over an 8% jump in prices from last year. Um,
Mhm.
is that something that you're seeing also in the market as far as just higher prices in Philadelphia? And why do you think that is?
It's the supply and demand.
Mm,
So if your supply is low and your demand is high, then your price is going to go up. So it's not a lot of, I mean, the listings are down, right? The active listings.
right,
So active listings are down. There's not a lot of houses on the market. Everybody still wants to get into the market. Everybody still wants to buy a house. So, and then we're also dealing with COVID times when the market just went crazy. So we're still everybody who bought a house in 2019, early 2020, right now they just have a whole lot of equity in their property because the market just increased so much. And it's going to continue increasing is what I tell people. So even if you get it, everybody now is saying they're going to wait until the rates drop. Well, if you do that, that's up to you to do it if that's what you want to do. But then
right,
you're going to get back into another COVID situation where you're paying 50 or $100,000 over the asking price.
right.
And those
Yeah,
people who did that, what they've done is now, as you know, the market goes based off of comparables. So if you get five houses on the same street that went $50,000 over,
mhm,
now you should want to sell your house for $50,000 over. You want to start at $50,000 over because that's a comp.
right.
Wow. So everybody who's waiting, you can wait, but you're gonna pay more than everybody who buys now and then refinances. So those who buy now are hoping that you wait and then buy at $50,000 over because then they can refinance and pull their equity out based on you waiting. So
You're right. You're absolutely right. What do they say about real estate? Buy real estate and wait. Don't wait to buy real estate. And
absolutely.
just echoing what Ann said, people that are looking for rates to come down, I'm not sure what you're looking at. But as you're waiting for these rates to do something, I mean, you're really timing the market. And timing the market usually doesn't work. Really don't know a lot of people where that's kind of worked out for. But even now in the January statistics, the months of supply in the Philadelphia metro area is 1.6. 1.6. So for people who don't know what that means is that if you sold all of the properties in Philadelphia, it would take a little bit over a month and a half. 1.6. Now, when you're at a balanced market, it's usually around 6 to 7 months, maybe 5 to 6, maybe 5 to 6 months. Okay, so this number, if this was a balanced market, buyers not a buyer's market and not a seller's market, then the months of supply would be around 6. It's at
Mm-hmm.
1.6. It's at 1.6. So that means there's not a lot of homes out there. So,
Right.
so if you are going to buy a home, if you are going to invest in real estate, there's a saying that the best time to buy a house was yesterday. The second best time is today.
Mm-hmm.
So
Mm-hmm.
you can wait and kind of look at historical numbers and, okay, I'm going to wait for that 2% to come around, that 3% to come around. But in actuality, what you're saying is I'm probably not going to buy a home.
Exactly.
And that's
Exactly.
we got to stop looking at these news channels who have a bunch of articles that have clickbait in them. They just want you to click, and they want your attention. So what's the attention? Oh, wait for rates to come down. Oh, rates are so high, they're at all-time highs, and so on and so forth. Well, let's look at the investment. The investment is you're buying a home that you're going to live in. It's going to give you peace of mind. It's going to give you control over your situation, and it almost acts as a savings account because you'll be able to participate in that equity growth that we've seen in Philadelphia. I think over the last year or two in Philadelphia, I think our equity jump is like 31%.
Wow.
So if you're renting, you don't participate in that.
Mm-hmm. Mm-hmm.
So we just gotta kind of get off the sidelines and break this rental culture that I do see in a lot of areas. So anyway, moving right along.
Before you move along, can I say something about the renters?
Jump
Renters should never be concerned with rates.
in.
I mean, it's just it's if you can buy if you're renting right now and
Right,
you can buy a house, there's no reason why you should be concerned with the rates are too high or I'm going to wait until the rate is lower because right now your rate, what is your rate?
100%.
What kind of benefits are you getting from being a renter? When you own a home on your taxes alone, you can claim the insurance, you can claim the
Right.
interest, you can claim I mean, there's so many things you can claim if you're a homeowner to lower your liability. But if you're a renter, I think you get a credit on your state taxes, but that's about it. So there's so many benefits to being a homeowner rather than being a renter.
And
Plus,
there's
you
go ahead, go ahead.
no, 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 you go.
Oh, I said there's so many programs out there, and
Exactly.
that's the one thing that always kind of trips me up is that you're already paying a mortgage. It's just not
It's
your
not yours.
mortgage.
Exactly.
You're already paying a mortgage. So this, I don't want to pay a mortgage. I want to rent, and a slim, there are slim opportunities where renting is proper for
Mhm,
people. If you just moved into a new area, you don't know the area, so there are some situations
mhm,
where you should rent. But
mhm,
in most situations, if you're paying rent, okay, and listen to this, guys. If you're paying rent, you're paying 100%. You're paying all interest. You paying 100% interest,
that you
and
can't write off.
that you can't write off. And you're making a down payment on somebody else's home, on somebody whoever owns that home. You're helping them pay off their mortgage. So
Mhm,
what do we need to do? We need to buy homes. We need to buy homes and take control of our situation. And just got finished going over a bunch of down payment assistance programs. One where you don't have to put um, any money down, 100%. They're paying 100% for the down payment, and then there's also an option, that 5% option, where some of that 1.5 can go to closing costs. So I know for a lot of people that down payment is a hurdle. Whereas, well, I don't have the down. It's not a hurdle anymore. All of these down payment assistance programs have made it to where it's not a hurdle anymore. The only hurdle is you. The
mhm,
only hurdle is you in kind of getting off the fence. And I know a lot of people, well, my credit, my credit, my credit. I guess how do you guys help people with their credit? Somebody comes with you with banged up credit. How do you guys help them?
I have a lot of people who tell me that their credit's not good. They can't get they don't think they can qualify. Like I just worked with a person just a couple weeks ago, and she told me her credit was bad. She didn't think she could qualify. You know what her score was? 725. So we've So you never know what your score actually is until you try. And I think it's just the mentality of, I can't do this. And you got to get out of that mentality. You got to get out of, I can't do it. You can do anything that you want to do. Even if your credit's not good right now, we'll help you. We'll tell you, okay, you should pay. If your utilization is high,
Mhm.
we'll tell you, okay, you need to pay this down, pay that down, and I'll help you with getting your credit fixed. If it's something that your credit is just too far gone and you need credit repair, somebody to help you clean it up, we have resources for that as well. We'll tell you, okay, I have a company that I work with and I refer my clients to them. He's a really good guy. He gets it done and he'll stay on top of the clients. But um, there's just no excuse. There's no excuse anymore. The only excuse is you just don't want to do it. And there are people who will rent for 30, 50, 60, 70 years, and that's their prerogative. That's what they want to do.
Mhm.
But when you close your eyes, what can you leave to your children? It's all about teaching our children, this is the mindset of, let's leave something behind. Let's leave a legacy.
Generational wealth. I mean, I
Mhm.
say this, I probably say this almost every week, is I really feel like the foundation of generational wealth is buying a home.
But a lot of people say generational wealth, but I sometimes I wonder if people actually know what generational wealth means.
Mhm.
Like, what is generational wealth? Something that it's not buying a car that you're going to pass down to your children, because that's going to end right there. That's not generational wealth.
No, and we got to stop passing down debt.
Oh
um,
yes.
because this is what happens a lot of times in our community is we're passing down debt to individuals versus passing down assets. You pass down
Mhm.
a house to your children, and I've even experienced it personally. That person gets that house free and clear. Now, for most people, their biggest expense is their living expense.
Mhm.
So now you pass that house down to an heir, and now they don't have that living expense at all. Yeah, they'll have to pay property taxes, but now you've in essence taken the largest expense from that person in their life, and you've done away with it.
Mhm.
So, and even on top of that, there's so many living benefits because what a lot of people do is instead of taking these large student loans out, what a lot of individuals will do is they'll just take out a home line equity on their home and
Mm.
have their
Mhm.
children go to school versus
Right. Right.
taking out these Stafford loans and all of this where they're paying their self back as far as the interest. So
Mhm.
and I guess what we're saying here is that there's no excuse. There's really no excuse that people have because there's so many programs out there. The government understands that homeowners make better neighbors than renters.
Absolutely.
So they're trying to make it easier. They're incentivizing you guys as far as to be homeowners. Question for these down payment assistance programs: are there any? Is there training that has to be completed? I know with some down payment assistance programs, there's orientations and one on ones and things that you have to do.
If you are a first-time home buyer or have a credit score under, I think it's under 640, then yes, you do have to do a home buyer education
Mhm.
program. It's all done online.
Okay.
It's not complicated. If you're doing the City of Philadelphia program, you do have to go to the a class, and I usually refer everybody to the Urban Leagues class. It's every Saturday morning, I think from 8 to 12 or whatever the time is,
Okay.
and you'll get that Philadelphia grant up to 6%, and then you'll also get $2,000 from the Urban League.
Right. Right.
So
Right. They're just giving money after money. It's just
They're just giving it out. Here, take it. Money for
right,
you, money for you, money for
right,
you.
right. They're just giving it out. So you guys definitely want to take advantage of this. Well, look, Ann has made this super simple. Whether you're a first-time home buyer, whether you're a second-time home buyer, whether you're an investor, they're giving out money. So the hurdle is you, as far as to jump in. And the thing about it is, when you're sick, you go to a doctor. When you're looking for housing advice, you come to a realtor and lender. So, and why don't you give them your information so they can reach out to you?
Absolutely. You can reach me by phone or email. My email is aking, AKING, at amres.com, AMRES as in Sam.com. Or my office number is 215-383-9397.
Awesome. So if anybody, again, if you're on the fence, get off the fence, give in a call, get pre-approved, so you can go out there, buy your first home, um, or buy your second home, upsize or downsize, or get involved being a real estate investor like you always wanted. And I'm Khaled Nathan Alim, the real estate boss. So if you're looking to buy a home, sell a home, or invest in real estate, I got you. All right, y'all.